All right, what time is it? We're ready. Oh, we're ready to go here. All right. What I wanted to talk about today, I don't know. I'm hoping enough of you find it interesting. If you remember last month, uh, we spoke, we touched on the bulk of the webinar was on this topic, and interestingly enough, there's not always anything really actionable that comes out of it. But there was a really, really interesting possible trade the last time we looked at this. You guys remember we looked at the positioning here on the BOVA Global Fund Manager Survey? All right, so, hold on, let me mute this. All right, and just to refresh memories, for those of you may not have been around, or for those of you maybe who didn't give a shit, and what am I doing? And didn't pay attention. Where could I find it quickest? Okay. Well, hold on. I got to think 1 second. My brain's not working right now. Damn it. What's the term I'm looking for here? Not the most crowded trade. I can't believe this. I had it just the other day. What's the term in my... No, not rebalancing. Jesus Christ. I just can't. My brain at 4 o'clock. I should have just saved the damn thing. Hold on. Just give me a second to think here. In other words, no, not overboard. In other words, it had to do with BOVA, the BOVA positioning when they catch kind of like people offside. The most painful trade? Oh, what, the pain trade? Maybe pain trade? Something like that. That doesn't say. No, not max pain trade. Let me try that. Nah, doesn't look like it. Yes, there we go. Thank you. Wall Street, next biggest. Here it is. Okay? There we go. Jesus Christ, Pete, huh? 4 o'clock. There's not too many brain cells left. I'm telling you. And me and my buddies have been talking about this for the past like 6 straight days, literally. And I couldn't think of it just now. So anyway, this is, yeah, I'm at least 2 pots deep. So I don't know if that's going to do anything, Sean. This is what we looked at. All right. The date was March 20th, right here. You can see it. Okay. And what we were looking at, again, to refresh your memory here, because we do talk about enough things. Okay. We were looking at how everybody was in this reopening trade, right? Because of rates. It makes you feel bad. Because of rates. And all the other noise out there, right? Legitimate reasons. But everybody got wrapped up into this inflationary, hate tech, hate anything tech, NASDAQ related. Okay. Everything got lumped into the same boat. And just anything that was going to benefit off the reopening, pile into. Anything that was inflationary, pile into, right? So we look at this. This is, and this is a whole article. You could go back and look at it if you could do what I just did on my personal Twitter, okay? But this is where we were at on that day, March 20th, okay? And you could see the positioning here, pretty drastic, okay? Tech, which has been a darling and has been a crowded trade for ages, all of a sudden was extremely hated, right? And here's the thing, because I think a lot of you get not confused by this, but the wrong interpretation by this. Okay, when they're talking tech, they're not talking Palantir. You know what I mean? They're not talking Sumo, right? They're talking They're talking big tech, okay, and not just FANG, right? Obviously, Microsoft, some of the big software names you can throw in there, quality tech, which has been a darling and has been piled into in the past. They hate it, right? We looked at charts that were showing some of even the mega cap NASDAQ names. You could throw Amazon in there with it, where hedge funds, that's all they were buying for a stretch, and they had no exposure to these things anymore. That's how drastic it was, right? We looked at the NASDAQ NDSI, the NASDAQ Sentiment Index, right? Went from one extreme to the other. Anyway, it all correlated with this, okay? And the new one's out this month, so I figured we'd talk about it and see if we can, go through it together in a sense. I breezed through it and see if we can find anything interesting. Okay, but this is what stood out to us last time. You had tech out of favor, and look at this, right? Commodities, industrials, banks. You could almost remember how hated these things were, especially banks, right? At a time. Industrials too. All right, and it's just they flip-flop. And these days, everything is done to an extreme. You got to get used to overshoots, because everything overshoots both to the upside and to the downside. Okay, you have that crowded behavior out there, right? Where everyone just piles in or everybody gets out, and that's been creating not only a lot of velocity behind these rotational moves, but overshoots. Okay, and we're kind of seeing that now, to be honest, in some of the mega cap tech names. Okay, so that was then. Again, if you want, actually, I might be able to do this. I don't know if you guys could save the link, but that's the old one. If you want to go back and just to review. All right. And at that time, you guys, again, it's not that long ago, right? It's less than a month ago. That was a difficult thing to acknowledge, right? Because look at Goldman Sachs on that day. Let's just look for shits and giggles exactly on the 20th. Right here. Okay, so this is what they were buying, okay, and what they were coming out of, if I could speak proper English, March 20th. So that's around here, right? Oh, no, here, my bad. Okay, so this is what they were coming out of. For the most part, QQQ, if you want to keep it simple. All right. So again, not an easy thing to acknowledge, like most of these contrarian trades. Okay. And I remember having this discussion with you guys, that, it was something we wanted to really get involved in, but it was tough to do at the time. And yeah, you guys bring a good point. And also, you had extremely favorable sentiment in NASDAQ. You actually had some intermediate term sentiment buy signals on the NASDAQ. Okay. But because a lot of the stuff that really got taken out to the woodshed was the high growth stuff, right? We felt like it needed more time, and they did. Some of them have barely, just started to come back today. Okay. But for the big guys, and for those of you who like to play the big guys, it ended up being an unbelievable trade. All right. Anyhow, spilled milk, right? But there's nothing wrong with talking about what happened in the past, whether you were in it or not. The best thing to do is go back, review it. If you didn't pull the trigger, understand why. Could be a legitimate reason, and that's fine. But if you didn't see the reasons why, you go over it and try to understand it. Okay, so let's go to today's. Sentiment can run hot. Well, sentiment can run hot when you got the Federal Reserve rigging the markets, you know? So, I mean, I don't know if we could use that as an example, you know? Sentiment can run hot forever if, you know, the Fed's going to say, I'm going to rig the game forever, you know? So that's kind of the problem with the game we're playing right now. Doesn't mean I'm going to want to go, you know, all in into sentiment heat, but sentiment could definitely overshoot to the upside when you got, you know, the government and the Fed rigging the game. All right, so let's go to, but we can't complain, you know, because they rigged the game at bottoms. That's what makes sentiment so awesome on the bottom, at the bottom. So I'm not complaining. You know, can't have your cake and eat it too. All right, so here's a couple of the quick. This is, in other words, if you want the quick, the Cliff Note versions, right? This is posted on private Twitter. I don't know if I got it in the market updates because we had trouble with posting screenshots, pics at the time today. But it's pinned on private Twitter for those of you who are members. Okay. And this is the Cliff Notes. So this is the first page of it, and this is a quick synopsis of, you know, what they've discovered on the positioning side here. Okay. And this is the fund manager survey for those of you who may not be aware. All right, so let's start down here because this is where things get interesting. Well, we can even start here, right? So on rates, right? That's been all the noise about higher rates and inflation. Rates, investors say short rates rise next 12 months. Everybody basically is calling for higher rates for good reason, right? We all could see rates going up, okay? Bull bear indicator down 7.1 from 7.2. So no movement there. Clients say less than a 10% pullback in stocks needs a treasury yield greater than 2%. So that's what everybody is thinking right now would create a pullback. Okay? The only way you're going to get a 10% pullback is if you get treasuries above 2. Here, modest rotation to tech, healthcare, REITs out of EM and staples. More broadly, investors positioned for boom via long equities, commodities, cyclical allocations. So exactly what we were talking about as a whole. Okay, as a whole, that's where all the money's been going into that reopening trade. Okay. Now, this is what has caught my eye. And we'll go into the positioning charts in a second here. Uber bullish sentiment, but no more bullish than the first quarter. So the same shit. Say positioning is peaking, cautious risk asset returns, bearish contrarian plays. So if you want to be a contrarian, you're playing peak earnings. You should sell commodities, banks, and tech. Bear contrarian. Bullish contrarians play peak yields, buy EM staples and utilities. Okay, so you got the two contrarian plays according to, I think this is Hartnett who draws this up anyhow. All right, so let's look at the fun stuff here. Can you guys see that, or I need to blow it up? Unfortunately, that's the biggest I could get it. All right. So here we have banks. Oh, so this way, banks most overbought since May 18th. Okay, this is going back. This is going back, I think, as a whole for the year. Let's look at the month first. Let's start there because I think that's where things get a little interesting. Here we go. Charts of the month. This is what I was looking for. There we go. So this is what we were looking at. Okay. Up here, we're looking. Nope, we're looking right here. Let me circle it. Okay. So this is the month from last month, right? That March 30th. Look at tech. Look at healthcare. The two sectors that they couldn't wait to get out of, they piled into. We see that in the price action, right? Especially with tech anyway. Okay? And look what they sold over here. Let me get these circles out of the way now. So you got emerging markets. And what's fascinating about this, I don't know if you guys have been paying attention, but everybody and their mother's mother was bullish emerging markets, to the point where they felt like there was more value there than in our market. That's how bullish it was. Okay. Now, I can't even believe what I'm looking at now, how quick it. Now, it's the total opposite, where they want no exposure to emerging markets. Okay. So if you ever thinking about making a play, for those of you who do play that sort of style, okay, now would be the time where you look. The complete opposite. Okay. Commodities, staples are kind of defensive. Energy, bit negative. Where are financials even on here? I don't even see them on here. Oh, here are banks. They're still positive. So it's not as juicy as I was kind of hoping, you know? I was hoping we'd see the total opposite of what we saw in March, which would be the total opposite of what we're seeing in the price action. But we're not seeing that. We're basically just seeing all of a sudden everybody wants those big tech names again. We know hedge funds have been buying them. Everybody's been buying them. But, you know, there's not enough bearishness on the other side here. That's what I was hoping for. That's what I was hoping for, is that reopening trade would be lined up even off just a mediocre pullback, sort of what happened with tech, but it's not as extreme. You know, you do have energy back on this side of the aisle, which is good. Okay. But, you know, you want to see this. You know, you want to see that, just like what I just showed you a month ago in tech. Them just give up, admit they're wrong, and flip to the other side. You know, they did it on the buy side. I guess that's what he means by uber bullish, you know, Hartnett. And like banks, right? That was part of that reopening trade. That's still here on the bullish side. So the only thing you got, you know, you got staples and emerging markets. Commodities are negative again. So not as appealing as I was hoping. You know, not as appealing as I was hoping. Let's see this. COVID is no longer the biggest tail risk. The biggest tail risk they feel is bond market taper tantrum, then inflation. And then you got higher taxes and COVID underneath there. What else we got here? Profit expectation still high. You know, there's some scary bullish things on here. More investors now expect higher short-term rates that we figured. Inflation expectations. You know, look. This goes to show you, though. Look how many times this thing was up here from 2008 I told you guys, this is deja vu again. Okay? They were expecting inflationary pressures from 2008 on, and they never showed and never arrived. You know? So we went through a little period from like 2018 till the COVID lows where they gave up on that. Now they're all in inflation again. Major inflation, you're nuts. There's major inflation. I think you might be borderline insane if you think there's major inflation. You might be borderline insane, Daniel. Oh, no, I'm not trying to be offensive, but you might have to go see a head doctor if you think there's major inflation. Where's there major inflation? We just came from a deflationary spiral. The Fed is dying for some inflation. Prices go up over time. Food, housing, energy is expensive. Two months ago, it was free to put gas in my tank. Relative to last year was the abyss. Last year, they shut the switch off on the whole world. How do you compare it to last year? Anything is up year over year. You can't compare that. I mean, come on. Inflation. You want to hear inflation? Talk to your parents and your friends of your parents who dealt in the 60s and you put money in a bank, they gave you a free toaster oven and a TV and 30% interest on your money. That's major inflation. You can't get 1% on your money now if you put a gun to the teller's head. It's the total opposite. Total opposite. We've been in a deflationary spiral where some people worry like a Japan type situation. No, the housing, cars, things go up over time. When you got the Fed flooding the system with liquidity, there's going to be prices go up. But, you took, in comparison to what? So anyway, everybody's expecting inflation here, which, for obvious reasons. Cash levels up to 4%. Cash looked like it bumped up a little bit. I'll be honest with you. I don't see anything too enticing that we saw the last go around here. Let me see. Investors now think. Here's what we were just talking about. Investors now think the S&P will outperform EM. Investors, look at this. Investors think Bitcoin is a bubble. Bitcoin. What else we got going on here? Net percent overweight equities. So a high percentage of people are overweight equities. We came from global commodity allocation has rolled over. What? Global commodity allocation has rolled over. Net percent say they are in commodities. So a lot of people in commodities. Yeah, unfortunately, see what happened? You get excited. I was hoping we see something interesting. There's nothing really too interesting here. Nothing too interesting. Let's see here. Long tech, the most crowded trade, but down in recent months. Oh, this is big picture stuff. Net percent thinks small cap will outperform large cap, but has fallen over the last few months. And record net percentage think value will outperform growth. So that's big picture stuff on on some of these things. These are pretty cool too, but yeah, they're just cool. There's nothing there. This is biggest tail risk. Right now it's the inflation, and most crowded trades, still long tech. The chart shows the full history of crowded trades. This is a little confusing now. The market leadership has married, long tech remains top, 31% crowded trade. Long Bitcoin, so long tech, long Bitcoin, long ESG, and then long global. They're covering everything, these bastards. They're going to leave us nothing. They're going to leave us nothing. All right, so unfortunately, like I said, we were looking for this, all right? This is what we wanted here. Something pretty drastic in like a major sector. And the only one you got is emerging markets. That's the only thing you got right now that they hate. You're right, Again, when the game is rigged, it's not that hard to cover everything, right? So, all right, let's look at some of the stuff short term here that becomes interesting. Okay, we have this, which I'm sure everyone's been following by now. So you got gamma up in the stratosphere right now. SPY gamma. I spelled it wrong somewhere. Yep. So this is what gamma looks like. All right. So now we're going into monthly expirations. Pretty normal to get a big reading as far as gamma exposure is concerned. Okay. And what happens is after expiration, usually you see a nice chunk of it come off. Okay. But what they've been doing, we talked about this a couple of times. What they've been doing is they've been front running the Monday move. Okay, so while everybody's waiting for Friday expiration where gamma comes off, you know what I mean? Sometimes you're going to move late Friday, it starts. They've been front running that. If you remember, they front ran us. Well, not that I would have traded off it, but we were looking for it the last go around, March expiration. We were looking for a similar thing, and they sold the market off on Thursday. Okay, so keep an eye these next couple of days. Yeah, it can sneak up on you. So keep an eye these next couple of days because they can very easily front run this. I don't know what the catalyst is going to be. Maybe there is no catalyst. Yeah, they can definitely do it. Nothing shocks me anymore. Nothing shocks me anymore because you know what it is? You see how we're looking at this stuff? There's too many people looking at it and they're going to front run it, just like those rebalancing situations when the pension funds are getting ready to rebalance and it starts a week before everybody pays attention. You know what I mean? So it's the same thing here, okay? There's no way around it. Gamma has to come off, right? Usually does. But they can very easily front run the price action. And that's what I would keep an eye on. And you have, it's almost like you could see it developing here, right? You got this melt up, and this is a melt up, okay, into Pink Panther now on ES, right? So they pushed all the chips in, they got into tech, front run meaning, Kent, instead of us seeing a possible sell-off on Monday based off gamma, we could see it tomorrow, Thursday. Last month, I think it was on a Thursday. Okay, that's a good question. So in other words, the reason why, the rationale, the logic behind gamma having an effect, okay, and it does have an effect. Trust me. Believe me, if I would rather not have to pay attention to this shit. Okay. I try to understand gamma, smoke comes out of my ears. All right. But it has a major effect. Major effect. Major effect. Okay. And what happens is when you get a gamma reading like this, right? The odds of a sell-off, the probability of any meaningful sell-off is slim and none. Okay. Because what dealers, market makers have to do to hedge off this type of gamma exposure, any little dip, they have to buy the S&P 500. So that's why you see throughout the day, you get these, literally these tight ranges. Like, look at this today, right? Where you just go nowhere. Right? And then late into the bell, you get a move. Sometimes you get a big gap up, and then throughout the day, you get a fade into sideways action. So early morning and into the bell, sometimes you get some movement, but in the middle of the day, this is what you get. Okay, because the overnight session has nothing to do with gamma. So futures could do anything they want. You understand? It's tied to SPX. Right, so the word we use is sticky. Price action gets really sticky. Okay, so you got an upside bias, but it's horrible price action. Okay, so then what happens, you got a major expiration coming here. Okay, when those SPX calls expire, gamma comes off the books. So what you're going to see is you're going to see the exposure, the reading on the exposure come down. I wish I could blow it up. You could probably see, I think this was one right here. Okay, and you can see very quickly just came right off. Okay, so you're going to see something like that. It may not, maybe not that much comes off, but you should see some sort of give on this. Okay, and what that does, it frees the reins. It's almost like the analogy I use is like you have a dog on a leash and you take the leash off. The leash comes off. So now the market has the window open for some volatility. And a lot of times traders would use that to take profit off a rally. Once gamma pulls back, is it rising volatility, downside risk? See, has nothing to do with direction. Okay, it has nothing to do with direction. All gamma tells you is when gamma's high, less volatility. Okay, and when gamma's low, greater volatility. Okay, that's what gamma tells us. It doesn't really tell us anything in regards to direction, but, and there's a key but there, what we like to do, okay, because the market is naturally bullish, right? Usually dips get bought, uptrends in bull markets, right? That's the norm. Corrections, bear markets, they happen, but they're not the norm, okay? What we like to do is when we get a pullback and you dip into negative gamma and you get bullish sentiment signals, okay? When they line up, that increases the probability of a squeeze. Why? Because sentiment is bullish, right? So that's signaling a squeeze. And what gamma is telling you is that when the snapback rally does happen, it's going to be violent. Make sense? So what we like to do, the way the actionable trade out there that a lot of us look to take advantage of is when gamma slips below zero or even low, and we get, bullish sweeper activity and sentiment signals. And they line up, the last few, as you guys saw, were beauties. No? Beauties. And the other beautiful thing, how gamma lines up well with sweeper activity and sentiment, is that it tells you that when the snapback rally, when that sentiment rally does occur, it's worth playing, right? Because a lot of times, you don't know if the squeeze is worth attempting to be early, right? Because if you're buying into weakness, that old saying like catching a falling knife, you can be early. And that can be dangerous. But what gamma allows us, it gives us a better idea of when the rally does occur, it's going to be worth your while to be early. That's what gamma allows us to do. All right. And on the flip side, I don't know how anybody else plays it, but me, again, I just get ready for sticky price action and eventually some sort of reversal. I'm not looking to short it, because I'm not playing the short side anyway. But that's how I approach it, So I kind of anticipate the rally running out of steam in a sense. No, well, like I'll give you an example. The gamma gang, right, or just people that play off gamma that I'm familiar with, a lot of them, what they like to do is write out of the money calls or, take a shot on VIX. You know what I mean? Shit like that when gamma's high. They write out of the money calls, collect the premium, that sort of thing. Okay. But usually, like the crew I follow, when gamma slips below zero, most of the time, not always, but most of the time, they'll buy VIX puts to start, and then they'll look to buy some out of the money calls on SPY. When it gets negative. So that's the gamma thing. So obviously it's worth keeping an eye on here because we're all the way up here. You can see pretty high reading. And if a decent chunk comes off, opens up the window for a pause in this move. And listen, the worse we rally from here, this is what we've been talking about, right? We spoke about it on the Sunday webinar. The more we rally from here, the bigger the problem becomes. We're at that point. Pink Panther is a reminder right here. Right? When you start seeing Pink Panther, what I mean by Pink Panther, this pink bar, okay? When you start seeing that, the rally continues from that point. Usually what happens, okay, if it gets stretched, at least they're going to wipe out all of Pink Panther. You know what I mean? At least. So the way to look at it is, your risk reward into Pink Panther on anything outside of a very quick trade is not worth it. Because you may buy here, and if you're not getting out here, you got to get lucky and get out before this happens. Whoop. You understand? And you look back again, sometimes not always as efficient. Like you see here, you had a little bit of a pause here. It wasn't that stretched, but you went sideways. Just Pink Panther wasn't much, right? So kind of wiped it out. Here, stretched a little bit. Look, wiped it out in a day. You understand? So that's basically what you're looking at here. So the reason I say it becomes more dangerous, right? Because you could see these, short little Pink Panthers are nothing, right? They don't have to be anything major, but you don't want this thing extending from here another 2 weeks, because then we got problems. And think about all the on the positioning side, how many more longs you're getting involved here. That's not good, right? Because we've already seen it on a couple things. That's a good segue into go peek at the hedge funds. What? Where are they? Oh. There we go. All right. So what they've been doing, they're already at elevated levels here. But it was all reopening. All the buying was in reopening. And now they've been selling reopening and getting into tech. All right. That's the word out of Goldman and Bova and all the houses. So it's got room. Okay. But again, it's only going to add fuel to the fire if they get caught into any, when the market does finally stop. And on top of that, too, this is, we got a few things that aren't at, complete disaster yet. Which, if this rally continues, will be. This is April 9th. What's today's date? Is this the one I'm looking for? Yeah, so this is it, right? No, this is not it. Oh, yeah, maybe it. I don't know. But this is the same premise. All right, so this is VIX positioning we were looking at, remember? All right, for this to be a real problem, could add to some significant downside pressure, this would have continued higher and this would have continued lower. But that little pullback we had, the one not that long ago that we ripped out of, helped out a lot, helped out a lot. So we don't want this to make a U-turn here. All right. Because every legitimate top, usually these guys get caught short VIX. Almost always. Almost always. And, you got VIX finally rolling over, right? Oh, 9er on VIX. And, you got a big guy doing some shopping in VIX. You guys saw that? Not the VXX, but VIX. Yeah, call spread. A lot of time, though. Yep. So we'll see how it plays out. We'll see how it plays out. All right. So that's the positioning thing. Gamma. What was sectors? Nothing really to look at there. If you remember, we had a couple things that were really, really nice as far as setup. Now, obviously, when you have a market that rallies like this, and the breadth has been subpar, because the reopening trade hasn't been participating. So they're painting the indices nice, especially the S&P and the NASDAQ, but there's not full participation. But anyway, so here's the problem now. If you remember into the lows when before the rally started, you had semiconductor buy signal, tech buy signal, utility buy signal if you wanted it, healthcare buy signal if you wanted it, consumer discretionary buy signal if you wanted it, biotech buy signal, right? The stuff to be careful was financials and energy at the time. But you had some nice upside potential in, especially some high beta groups like semis and tech. Now you got Gats on Gould, which means nothing. Just pretend it means nothing. But look at financials. We were hoping for potentially a buy signal. Yeah, nothing. We were hoping maybe the industrials cool off into a buy signal. Nothing. This is the only thing that's even close. Yep. So like we were talking about, you could start looking in energy, but there could be one more wash there. And then you get that buy signal. It could be. It could be early. But where the market is right now, if there were a couple other things that were down there, maybe I would be, I would say it'd be worth getting a little more aggressive in like start energies and stuff like that. But I don't see it here. Not at, in the possible middle of a melt up. You want to. This was the week, right? This is kind of you could see the melt up developing, and this has got to be it this week. This has got to be it. We need a breather here, right? For this market to remain bullish, net, big picture, we need a breather. We need a breather. There's no ifs, ands, or buts about it. If we don't get a breather and we get the continuation of a melt up, you saw what happened in the stuff that acted like that, right? All those retail spots. Look what happened to them. There's a lot of pain at the end of that rainbow. Yeah, and even we just need a breather. It doesn't even have to be a certain percentage, Joan. I know you're just saying preference-wise, but it could be time. If you told me we're going to have a couple days of weakness and then just go sideways for a couple weeks, that would get the job done. These are old. Why are these still up here? You understand what I'm saying? That would get the job done. You need some digestion of some sort. You need it. Okay? And here's the other thing. For so long, they've had sectors to rotate into. Okay? Right? They always had sectors that had decent upside to rotate into. They don't really have that now. They got biotech and energy, maybe, right? They don't have that. So in other words, if they rotate into some of these reopening themes, they're going to be cooked before you take a breath. Yeah, somebody made that point to me on Sunday. It is possible they can go back into that high growth deflationary play. That was software, you know what I mean? E-commerce, that sort of thing. Yeah, and not have a big impact on the indices. That's certainly possible. But you rather the indices, you want the indices to cool off here. You want tech to cool off here. And as they should. I mean, look at these moves. I'm pulling up Apple, might be the worst move of them all. Like, look at it. You've had some explosions and big names here, right? And not even some of these things are double niners. Here's a niner, little breather, boop. Some big names, right? Amazon's been cooking. Look at that. Amazon Gamma's up through the roof. Square. These are significant moves. Home Depot too? Oh my God, that's still going? I thought they cooled that off, Home Depot. Jesus Christ. And Home Depot was nice because look at this. You had this nice breather here, right? Look how long this breather was. This was nice. And it just busted it out right there. Boop. Really nice. But now, yeah, like you're saying, now it's just cooked. And another thing we were talking about, let's not lie to ourselves, right? The last couple of days, there's been some really nice moves out there, but you really have to be tactical with these things. You weren't going to sit in these things and feel comfortable over the last couple of weeks. There were, like, for example, some of the stuff that caught some nice action. There's been some decent moves, right? There's been some decent moves in them. Plan, D-Dog, all of them have moved nicely. But, the bulk of the moves just happened as this melt-up started. Prior to that, it was really choppy price action with that constant rotation going on. And, it's almost like on a day-to-day basis, you needed to know where the money was going. Yeah, well, it's easy now. You look at a square and you say, wow, Jesus, all I had to do was hold it for 5 days. But, we were in an environment where if you didn't get out of square, it came right back down and you lost money, right? So into earnings, they gave it a little leash. But you can't let this stuff bother you when sentiment is up here. You can't. It's not the time to let go of the reins. It's not the time. You just got to be thankful the gods gave you a quick, nice winner, and that's it. You know what I mean? You want to be thankful for that, and that's it. You found a way to make money while sentiment is on the hot side. Who's better than you? You can't, because it's dangerous. It's dangerous. Yeah, that's like getting queued up here, right? It's dangerous. We could see another week of upside. We're melting up in a rigged game very easily, but it's dangerous, especially now with earnings. Yeah, again, when you started looking at these things, nobody wanted them, right? Even for tactical trades, I'm talking. Okay. Now, everyone's been, especially hedge funds, they've been piling into these things. Now it happens quick, right? I mean, Nuon caught news, so that's a little different. But what was that other one? That Yeti, son of a gun. That one too. Just, went from a choppy mess, smooth sailing for a week. And if you bought at the bottom of the range, you probably sold it early. But on the tactical side, where you didn't have to hold all that overnight risk, there have been opportunities, right? You guys have been nailing some of these names. Granted, you're not going to hit the ball out of the park like maybe you would if you took a swing position in it. But you get in the middle of some of these things. There's been some nice momentum. I know, like Tesla, you guys were talking about today, was on fire. Look at that. It's nice. But, we don't know what tomorrow brings. That's kind of the problem. And that's poorly said, because you never know what tomorrow brings. But the risk is, with sentiment where it is now, tomorrow could be ugly. The next day could be ugly. The following day could be ugly. You know what I mean? There's a lot more of capability of being ugly ahead here. Yeah, and there another thing too I wanted to mention. Like, nobody likes losers. I get it, okay, but especially for you option traders, this is not the worst time to trade call side options, right? You don't have to load the boat. You don't have to go nuts and stress every down tick, okay? It's more dangerous in the equity right now, in my opinion, okay? Because you could manage your risk so efficiently in options. You can't do that in equities up here. Okay, you put in what you're willing to lose into a call, that's all you're losing. The stock could go to zero for all you give a shit, right? Stock could go to zero. But you're buying Tesla equity or some of the big movers we've seen over the past week. You're buying equity and you're buying the top, and you get caught in a pretty harsh pull. You could get lumped up. You could get lumped up pretty quick. Gap, right? Like think of this, right? This one. Can you imagine? I can never buy the equity in this. I can never do it. Yeah, you're gonna have to keep one. You're gonna have to keep stops tight, and showing the likelihood is you'll get stopped out, right? And second of all, a gap down, your stop goes out the window. You know what I mean? Like, God forbid you catch negative China news or something like that, you're finished in the equity. You're finished. Where in the calls, you could say, you know what? This is risky as all shit, but if it squeezes, there's a decent reward, and I'm willing to lose what I put into it. It's just a loser. It's just a loser. That's the worst that can happen. I'm talking about anything right now. I'm just talking about sizing down and risking your premium, Dean. You know what I mean? Risk your premium. I think that's a good approach for anything you're looking to play out there right now. You know, anything. Right? Because you're comfortable. You should be comfortable with what you're willing to give back if you happen to run into a loser, and it's just a loser. That's all it is. Like, yeah, I see people sometimes, they complain they're in weeklies and a stock gets killed. Buddy, that stock could have been unch and you would have lost the same exact money. What are you complaining about? You want it to get killed. No, I'd rather the stock get massacred if I'm in calls than just sit there and do nothing. You know what I mean? That's the beauty of options, guys. And we see that constantly in the flow. That's what all these spec momentum sweeps are all about. What do you think they're doing? They're placing bets like they're on a ball game. You know? So you shouldn't be afraid of losing, especially if, and a lot of you have had a decent year, the past year. Now, you could be prudent about it, but I'm saying if you're going to play, that's the way to play. Calls come in handy right now. Fastly, maybe it squeezes. That looks actually decent. That looks decent. There's so many names like this, Pierre, that look interesting to me. And, you're going to try to catch a squeeze into earnings. I got a list of these names. I can give you 50 of them, from small cap to mid cap, on the smaller side, names like this Wish. Like, look at this thing, right? There's just so many names that are just laying on the concrete pavement dead. Yes, net off the Amazon news was a huge winner today. But the thing, Pierre, is this, like, these things have been obviously out of favor. Like, these are the high multiple plays. Okay, the problem with the rotation that was going on was they were treating Amazon like Fastly. You know what I mean? They were treating a profitable quality name like a Fastly because interest rates have bounced off zero. So it was misplayed out there, and they corrected that. Now, does the money come into some of these growth setups? I don't know. I'll tell you what has caught my eye, and earnings is getting in the way here. Okay. And it's something we've been talking about with members. The one thing I really like what I'm seeing here, okay, around all this bullishness and sentiment and all that stuff, normal market behavior has been coming back into play. And you're probably saying, what the hell is he talking about? Okay. The retail player has got completely wiped out of this game. Now, I understand there's some retail players lingering. I understand they went to Bitcoin. Okay. I'm talking about in the market. Everywhere retail players were crowded into, they got hit over the head, black and blue. Black and blue. Okay. And holding on for dear life, hoping one day they come back, right? SPACs, you name it. And, you guys see this? I showed you guys in the room this, but let me show. I posted on Twitter too, but on private Twitter. Look at this. Right? This is what I'm trying to put into words. This. Okay? That retail frenzy, which was just psychotic, okay, is done. It's over with. Now, it may come back someday, but what we were worried about is over with, okay? And what's been going on now, money has been selectively finding the quality names again, okay? And you see, like, if they're going to buy software, right, they're not buying every software name just because the word software is in the description. They buy Plan, they buy Nuon, they buy D-Dog, right? They buy a team, right? So they're selectively picking out the real names they like. You understand? They went into big tech, right? Quality, Amazon, Facebook. These aren't SPACs. These aren't companies trading at 80 times sales. So the reason I like that is that it brings the stock picking mentality back into the game again, right? It's something that if you bothered using any brain cells on, right, in January, you were an idiot because it meant nothing. And the worse the fundamentals, right, the more dog shit. Remember we were saying, like, the shittier the stock, the better the play it was, right? 80 cents, fantastic. That meets the standards. You know, yeah, go have zero revenue, terrific. Let's buy some. Okay, it wasn't worth even looking at. Is the company profitable? You know what? How many times we were buying things, and I do this a lot anyway because I'm trading off flow, but we don't even know what the hell they do. These names that we owned, you know, and it was just a mad rush into these things. Like they kept going higher, like they had the cure for cancer, right? Just up in a straight line. Like CCIV, that SPAC, like nobody, they were hoping it was Lucid. They didn't know for sure. Who the fuck is Lucid? I didn't even know who Lucid was, let alone were they merging with Lucid. And this stock, I mean, you look at this move, it went up like you thought it was going to be the next Amazon overnight. Right? Right. It was just a frenzy. That's what they are. Retail frenzy. Okay? That's gone. Boys and girls, it's gone. It's not like we're at highs here and the retail frenzy is at a boiling point, right? At the highest it's ever been. That's gone. It's over with. It's nowhere to be found. Where's the frenzy right now? And that's the thing too. Presley, you hit the nail on the head. They didn't waste any time, the market gods. They kicked the living shit out of them. You know what I mean? They didn't even make it look good. A lot of times they'll make it look good. You know, you'll go into a downtrend, lower lows, lower highs. They kicked the living piss out of them. Wiped them all out. So, you know, I wish I could say, like, with sentiment up here that, you know, oh, yeah, everything's bubblicious, this, that. There were certainly the capabilities of bubbles out there, some big and dangerous bubbles. They've popped them all. They've popped them all. You know, and now you're starting to see, like, money find the real stuff. Like, the money wants to own the real stuff. The bigger, the more quality, the better. And that would be a good thing if that carries over post earnings. That would be a good thing because it's healthy for the market, one, you know, and, you know, you don't have that 1999 situation at the top where everybody's holding that long bag, and then you got to deal with that on the way down. Somehow, some way, they wiped them all out, and you can't even tell in the market where they did it. Is that unbelievable? If I told you SPACs and all these Cathy stocks would blow up, okay, and you couldn't find it on the S&P 500 chart, would you believe me at that time? No way. No way. A lot of people thought when SPACs blow up, the game's over. It's amazing. Yeah, but you look at like ARK, right? So that's what I would recommend. Like you see, like Cathy, okay? There's a lot of like lotto tickets in Cathy's universe, right? That's the way she likes to buy names with a bright future that just aren't there yet. That's just not. But a lot of her key names, they're legit names. And if you're going to play anything, you got to try to stick to the key names and hope she's right on the fundamental side. Like for example, Roku. Once upon a time, Roku was, like all these other high multiple stocks that were just a story and fly by night. And then Roku became real. And look at Roku here. That's a nice move. So they're picking and choosing spots. Normally you'd see Roku here, and then you would see like this piece of garbage, Space. Like, come on. I listen, I played Space probably just as many times as any of you. I effing love that stock. That stock was awesome off sweeper activity. But give me a break, right? Give me a break. Like spaceships. You know what I mean? Seriously? Booking trips to space 3 decades from now or whatever it is. Forget about it, right? So, look, but the real names are hanging in there. So like what names have you guys been looking at? I would, all the stuff you think is real, or know is real. If they get hit, and they probably will get hit off the earnings initially, I would say at least some of them will. You got to look for sweeper activity there. You got to look for sweeper activity. ADI, John, without a doubt. That goes for all the semis, I think. All the semis. All the semis that we follow. If we get a nice little breather off this niner here, you know what I mean? God forbid get a bullish signal on the sentiment side on semis. We got to be ready for that because semis are always beauties. But ADI, all of them. But ADI is real, no doubt. Penn, this is a tough cookie. This had, quite the run. But, might just need to digest. Because Penn was a real company even before Barstools. They even look at, like DraftKings. They even beat that up recently a little bit, right? Like this was the one holding up. Oh, that's not even that bad of a beating, to be honest. That's not even that bad of a beating. But it scares me a little bit. I'm not going to lie. Playboy has been the exception to the rule, and I think that's why the majority of us are talking to ourselves, Bill, who, I'll be honest with you, I did not think this was going to happen while the whole rest of the SPAC world was blowing up into smithereens. While the whole rest of the SPAC world was getting annihilated, you wanted me to believe Playboy was going to do this? Get the hell out of here. It's happening right in front of my eyes. And I still don't believe it. Yeah, maybe there's something bigger going on. It's really crazy. But yeah, that's the exception to the rule. Thanks for bringing it up, Bill, and killing my whole thesis. STNE, that's fintech, right? There you go. That doesn't look bad at all, right? They love to sell puts in this thing. They love to sell puts in this thing. Yeah, I remember, John, you talking about a pullback in this thing for ages. You finally got one. You finally got one, huh? This thing went up, grinded higher. It felt like every day, 15 cents at a time. Did you? So there you go. Real, this thing caught some longer term action from time to time. And I've looked at it quite a few times. This looks interesting. Real looks interesting. I know it. I know it's probably not the same thing. It kind of reminded me of this. That's why. The RVLV, which has been a real nice winner. Sting cooled off because the reopening theme cooled off. Definitely. This reopening theme too, if that applies to everything I just said. If we get a breather, and we're getting a breather in quite a few of these things, I wouldn't necessarily say Sting is quality, but for anything that is quality, it's worth a look. Worth a look. Chewy. That still looks okay. Chewy's done with earnings too, right? Sting, I gotta say, Sting is quality, no? Let's just lie and say it's quality. Chewy's earnings are over with too. It'd be interesting if it caught some heat. That's the trifecta there, Dan. Twilio, ZS, Crowd. I mean, Twilio and ZS, I know Crowd, cybersecurity people love it. But like Twilio is a beast. You know what I mean? Like, look at it. It's back near highs already. ZS, that's another stud. That's another stud. When earnings are further out too, right? June. I would rather, this is where earnings are going to get in the middle though. See, you had this move here. If you're not in it already, you got to hang out now. You can't chase this move. You can't chase this move. Kind of hatched. You know what I mean? You got to wait for a breather, a dip of some sort. Same with team. You're talking a niner to niner, right? So it was tough, but if you liked it, you had your opportunity. You had it. It was tough to pull the trigger. I get it. Trust me. But niner to the niner, if you're going to hold it, it's one thing. You can't buy it here now. You can't buy it here. I think it's up on earnings too. I think they came out with earnings. They snuck them in. Let me see. Right? Not up much. Oh, preliminary. Yeah, Twitter, a lot of flow there too. The other thing, you guys are option players, so I'm surprised like you guys don't complain about it even more. But like during earnings season for swings, you guys, the IV doesn't bother you? Swinging these things during earnings season? Like you're going to buy a name ahead of earnings. IV is going to be junked up. You have to, right? You have to. But even then, Matt, I think you got to like stay tactical. It's so much better post earnings. So much better. So much better. Because you see how IV just, comes right off it, right after earnings. So I think, especially with some of these things that they're not as hot as they used to be, I think you wait for swings post earnings. If you're going to play, if you're going to play the options, it's just not worth it. It's just not worth it. if anything, you play these things now, you want to try, you just looking for trades. Yeah, I guess you could play spreads, right? But the majority of people on here are just buying calls outright. And I think you have that luxury where you could wait off earnings here. I think there's going to be something that gives us decent entry off earnings. It's either going to be the reopening side or it's going to be the tech side. One or the other. One or the other. That's why I'm looking forward to earnings season here. Maybe all of it. Yeah, Matt. Matt brings up a good question. Hold on. So Matt's asking whether I think it's still a more suitable time, if you remember, to play the S&P 500 as opposed to playing individual names. And we've had this, like I said, this last couple of days where you had some of these tech names really heat up. But think you got to get lucky. You got to get really lucky. And if you're looking for a smooth ride, it's been here. Now, it doesn't apply here, Matt, because you're playing into Pink Panther here. You know what I mean? So it doesn't apply to anything here, to be honest. That was kind of coming out of here, right? So the point was this, Matt. If all signs were leading to some sort of melt up, right, into like earnings season, you could have rolled the dice and pick a name, right? And you may have picked the wrong name and you would have been talking to yourself, right? You could, if you picked a PLTR or one of the other smaller caps, they just started to move now. So that was my point, that you were just better off making a bet on the indices and you're going to get paid on the melt up. You understand? So that was my rationale then, because individual names were tricky, but it was still like a bullish setup out there. Now, now we're into some heat and earnings season, so we gotta chill out here. We gotta chill out. Now we short the shit out of everything. I'm telling you, it's a good time, because if this rally continues from here, we know we're in trouble. But if we do get some sort of breather, right, we know what to look for off the breather to set up another one of these entries. We're at that spot now, man. We're at that spot. It wasn't a given we'd get there, right? But any other spot, if we went to here and had a little pullback, that would have been a nice entry, right? Here, little pullback, that would have been a nice entry. So we had spot. Now here, right, same thing. We want a little breather. If we don't get it and it continues to go higher, we're going to be in trouble. Again, trouble meaning that little pullback, the odds of a little pullback go down. The pullback's likely to going to be a little more violent. Yeah, we get a better entry. But, that's what I'm saying. Like, this is a good spot here to chill out on a lot of things. You know what I mean? To chill out. Yeah. And if you're holding on to positions you're up on or you have time on, I wouldn't hit the eject button across the board. I would if this continues. You understand? I would if it continues, like we're saying. So if you have a position or two you're holding on to, especially if you had a nice entry on it, then I wouldn't hit the eject button yet, if you have the time. But if we continue higher through these stop signs, you probably want to be as light as possible, or put on, protection or whatever the case. Yeah, and that's the thing. You could just, again, guys, you could stay tactical, solves all problems. Not every day, especially, of late, not every day is going to be a great day. You're going to grind it out. You're going to have scratch trades, whatever. It should even itself out. But then there's going to be a day where, you guys catch a Tesla nice on a day trade, and you're going to cash a nice ticket. And that's what it's all about. Your scratch trades are likely going to wash out if you stick to your plan. You know what I mean? You're going to have winners. You're going to have losers. You may make a little money or lose a little money. That's the extent of it. But the once in a while you step on Tesla off a sweep and you end up cashing a nice ticket by accident, that's where what you're going to see in your P&L. But if you try to force it and make every day and every week like you caught that Tesla, that's where you get your ass kicked. That's where you get your ass kicked. But, this is a good time. I've been using that word a lot, but a good time as ever to stay tactical on an intraday basis here. On an intraday basis. And it's been good for you guys over the last week with a lot of these big names you guys like to play. They're liquid, and you can get in the middle of some of these moves. Sometimes you get really lucky. Sometimes you get really lucky. Like, sometimes it backfires, like net. Like, let's admit it. Who scalped the net today? I know a couple of you caught a decent move out of it. Raise your hand if you scalped it. No, if you just scalped it and, you made a little bit of money and got out of it thinking nice and quick, it's going to happen. But, sometimes you feel a little good about it. You raise a stop or you give it a little bit of a leash intraday and, you get lucky and you catch one of these. Yeah, it's going to happen. It's going to happen. It's going to happen. But again, you want to make sure you're looking in front of you. You know what I mean? In other words, what I just explained to you, there's going to be days, plenty of them, where you have scratch trades, and that's okay. You're going to make a little money, you're going to lose a little money. The likelihood is they're going to wash out in the long run. Are you still holding the net? Wow. Being maybe nice you get a follow through tomorrow. You just need this market hang in there one more day. UPST, how'd that do off that sweep? Any bounce? Oh, looked like it bounced. Wow. There you go. There you go. Very nice. Very nice. Yep. So, that's the name of the game, though, guys. That's the name of the game, right? The thing to avoid, and will be fine, so you don't end up like, a lot of the newer retail traders who are holding buckets of SPACs and GameStops. You don't size up here. You know what I mean? You don't size up here. If you're going to try to hit the ball over the fence, make sure you're risking a smaller amount. That's it. You don't have to hit the brakes completely. We're all degenerates. I get it. Yeah, for the most part, once in a blue moon off chatter or rumor for a scalp at the most, Dan. But all my buys come off flow. If you're talking about swing trades, without a doubt. Swings, I can't remember the last time I bought any calls for a swing that didn't have sweeper activity and decent amount. Yeah, but that's what happened, Gord. That's exactly what happened. There's no other way to slice it. If they got buried in specs, they chased, and if they knocked them out of the game, they sized up. They sized up. I just thought of I don't know where I saw it on YouTube. Some guy, I couldn't believe what I was watching. I can't anymore with this generation. A YouTube show was on. Don't ask me how it even got on my YouTube. And there's this guy with like what was it? I forgot, 5,000 people or something watching him, and he's showing trades. First of all, he's crying the blues of how he got devoured. And then he's showing his trade, and listen, everybody's different, but he's down $10, $10. And I'm saying to myself, oh my God, $10, you have no idea, buddy. You should thank the Lord you're down $10. I don't care how old you are. $10? You got destroyed on $10? And then I started thinking, I'm like, who are these 5,000 people taking advice from this guy who's crying the blues over losing $10? There's 5,000 people over there. Yeah, TikTok, or was it Fervor? What the hell is that? Fervor? It's some crazy stuff out there. Crazy. Weird stuff. There's one guy like, I'll teach you everything about trading. I could show you this and that and how to do this and how to make $1,000 a day. Let's set up a session. The only thing, we got to set up that session after my day job. After my day job. That's the only time I can do it. But I'll teach you the ins and outs and everything about the game. After my day job. He's going to teach you for $300. He's going to show you how to trade and make all sorts of money. After he's done delivering food. Yeah, it's nuts. But, you had people locked in their house. They had no gambling. So they got into the market. What are you going to do? It was an interesting time. But anybody else have anything to add or anything we didn't touch on? I was hoping we'd have something somewhat exciting, at least starting to develop out of the BOVA positioning, but there's nothing there. Unless you want to play emerging markets. Which, who the hell wants to do that? Oh, I don't even know, Dan, to be honest. I don't know what they stand for. One is for measures opening put buying and stuff. I don't even know. Vanagam. Oh, is that what it is? Oh, net pull delta. Yeah. We're good? All right, so the game plan. Oh, you're getting your vaccine tomorrow, Jay? The game plan, we're going into earnings season, nice and easy. But, keep an eye on names you like post-earnings. Especially they sell them off. I think that's where some opportunities, right? They sell off a name, off earnings, see some sweeper activity. Nice entry. Do sweeps sometimes close out in the same day? Yeah. That's the problem with weeklies. Whoever asked that question, it just disappeared. But that's the problem with weeklies, especially in this environment. They're probably out of them already. But yeah, they flip them a lot. A, B, and B. Yeah, they could have flipped those. Exactly. They could have definitely flipped those. That's why I'm not going to put any on the top bet list. Till we get through earnings season and stuff. All right, boys and girls, always a pleasure. I appreciate you guys stopping by as always. All right, good luck the rest of the week. Enjoy the night. Stay safe.